Well, thank you for that introduction. Great being here and great to come after Peter here. I know what a lot of you guys are thinking. Yet another payments company. I mean, you see new payments company being launched all the day, right? And but I would like to take the opportunity to bring what Peter also said into a broader perspective on why this is so important. Because monetization and payments is really at the core of commerce. I mean, just imagine in the physical world what would happen if we would not have efficient way of monetizations. If payments, money wouldn't exist, or if every time you would come to buy something, you would have to register and go to multiple steps to buy something. I mean, that would be horrible for the economy. It would probably bring the GDP of the world back to the Middle Ages, right? So it is so essential to commerce that monetization really works. And I know, of course, in this crowd I'm probably preaching to the choir, but I think, however, still it's something really, really important to remember. Now, when we think about a physical world without means of payments, it sounds really crazy. But yet, that is actually what's going on in the digital space. Out of 100 people that click go to checkout, only 33 in a desktop environment actually finalize a purchase. Now think about that again in the physical world, where you would have 100 people in their local ATM store go up to the checkout, and then 77 of those would just leave. I mean, the store manager would go crazy. But here in digital, we kind of used to that. We said, well, it's just the way it is. But it's actually even worse on mobile phones, where out of 100 people that click go to checkout, 16 finalize their purchase. Why is that? Well, I think anybody who's been sitting on a bus with their mobile phone browsing and want to enter a credit card number in that bus knows really well why that is not working properly. So really, online commerce is in the Middle Ages, and mobile commerce is in the Stone Age when it comes to efficient monetization. That is why we at Klarna are so passionate about payments, because what it really is that it's not just an interesting business aspiration, it is something that potentially can transform the digital space. Just think about what it will mean for the digital space when monetization will be as efficient as in the physical world. What it will do for all the startups and companies trying to establish business in the digital world. So what we're trying and aspiring to do really is to grow the GDP of internet. And that's the aspiration for the company, and I think what lies at the core of what every payments company should try to do in the digital environment. Now, this is of course a problem that exists not only in the UK, but in Europe and in the whole of the world. But it's actually somewhat worse in Europe, and I think this is important to bring up. Because if you look at the European landscape, in order for a merchant today to efficiently monetize in those top 20 biggest markets in Europe, you need to integrate over 40 local payment methods. 40 local payment methods. That doesn't exist in the US. In the US, you're fine with maybe Visa, MasterCard, Discovery, and PayPal. But in Europe, you need to integrate so many in order to efficiently monetize. And what that means, of course, is that the digital world in Europe is less efficient. And the companies here are impeded from growth because they cannot grow at the same pace because they cannot monetize efficiently. So this is a structural problem for Europe that needs to be solved in order for the European online landscape to be competitive and for the online companies here to be able to access the volume and the size of the market that there actually is in Europe. Now, I want to share another big secret of ours when it comes to payments. And this is something that I tend to feel that people in the industry forget. And that is, nobody cares about payments. I mean, we do maybe in this room, but actually our users, the people out there, they don't really care. And I think that's so important because often when I see payments companies trying to reinvent the industry, they have an expectation that consumers will care, that consumers will go through different actions in order to solve this problem. But most of us don't. Most people, they just want to click buy. They don't care about everything that is associated with payments. And I think that's extremely essential to remember when being in the payments industry and when trying to innovate it. So, in order to really create simplicity, what's really been exciting for us has been the fact that solving simplicity in the payment space looks like a really simple problem at a glance, but once you start getting into the deep nitty-gritty details, you realize it's quite a complex challenge, and I think that's why it's so interesting. So when we tried to create our latest product, the checkout product, we really set out to have an ambition that it would be no registration, no passwords, no pre-registrations, no downloads, nothing. It should be a simple click. Now, it should be really, really sophisticated in order to solve that. But on the outside, the actual user experience should be really, really simple. I mean, just look at Google search. Everybody understands there's a lot of complexity to give you that instant answer to your question, but the actual user experience is extremely simplistic. And I think payments has to work in a similar way. So I'll give you a concrete example of a problem that we solved in a new way. Now, remember verified by Visa. It's a typical way where I see how the industry tries to solve a problem. We have a dynamic problem, which is fraud, which changes all the time. The fraudsters come up with new solutions on how to fraud your systems. But at the same time, we're seeing all the solutions to this problem being very static. So for example, when Visa introduced Verified by Visa, they had probably 99% of the transactions being fine, and they had 1% or something being fraudulent. So what do? They create Verified by Visa, which requires the 99% to enter the 3rd, 5th, and 7th character of your password or something like that, and actually ruin the user experience for the 99% to solve for the 1% problem. And look at another example of this, fingerprint readers, right? Apple launches, kaboom, we're going to have fingerprint reading devices on the phones. 1 week later, it's announced that somebody hacked the system. So what we said should be core at the payment system is a dynamic solution to this. So even though it looks extremely simplistic when you access it, what we actually do is we look at every session with every user as a dynamic session. And depending on the risk of this specific transaction, we change the amount of friction and the authentication methods in order to finalize a purchase. Because it is a very big difference if you want to buy a virtual goods in Candy Crush, or if you're trying to make, 100K pound or whatever transfer for your new Tesla car. So the point is that to have a dynamic approach and a cloud-based approach where you could actually change the user interaction depending on the risk of a specific transaction, that is the solution to the long-term problem of fraud, which actually allows you to dynamically fight a dynamic problem. So the best feedback that we've really got is that it's a little bit like the iPhone versus the feature phone, which a merchant said to us. That if you ask somebody today, why was the iPhone successful? Nobody can really give a good answer. It was kind of just easier to use. It was all the nitty-gritty details. And I think the same is true for payments. So I started with saying that a lot of people are claiming they are going to solve this problem. And so you probably heard part of this pitch before. And there are multiple payments companies out there. But I'll also add something else to you. I think we are one of few companies, if not the only one, that have actually put numbers behind this. We have already launched the checkout product in Sweden. It has increased conversion rates by over 100% in mobile e-commerce. It has increased conversion rate in desktop e-commerce by another 30%. And actually today, we process over 7 billion pounds of volume every year with $200 million in revenue, being a profitable company with 1,100 employees. And to finalize this, I'm really happy and proud to announce today, our first UK transaction was made this morning. Thank you very much.
Did they buy a Tesla?
Unfortunately not. Not this time, but it was some fitness stuff.
I like the way you're framing the audience actually as aspirational Tesla owners. It's very smart, although they may be Candy Crush players. Can I ask a bit about what happens behind the scenes when somebody makes a payment, what sort of data points do you examine in real time?
Right. So, I mean, basically, we try to look at all the data that could be accessible for us at the time of purchase. But one of the key differences to the traditional Visa and MasterCard transaction is what we call SKU level data. So a typical Visa card transaction will only know the amount for what you're buying at a specific merchant, while we actually know the every line item data. So what did you actually buy? A couple of t-shirts or an iPhone or whatever that is. And it's all of these what we call behavioral data, the surrounding data that you can get access to, that actually allows us to limit and think about what is the specific risk of this transaction in order to minimize the friction so that a purchase can happen in so many cases as possible.
And do you track identifiers of the individual, where that person is, who else they're linked to on social networks?
We have actually done testing with this whole social thing previously with the permission of some of our users. And the thing was that back then, at least, we could not see a significant difference by using social data. So we've actually, at the moment, not used it because it's quite complex to get access to it and so forth, and it hasn't added enough value to us. There's so many other low-hanging fruits in data that you can access that are more predictable to credit risk and fraud risk.
Where's your next territory?
We'll see. Well, maybe you can give me a good idea, just like you did previously today.
The American market's a big one, but it's quite challenging.
It is, for sure. But I think that what we're seeing now is really that as industry, the internet as an industry is maturing, the innovation is less something that we see with the naked eye and much more sophisticated. And I think that the differences between the old players and the new players are harder to distinguish from the outside. But if you actually look at the numbers of conversion rate on phones and so forth in the US, the potential is there for sure.
I've got one last question, which is not particularly about payments. It's about Stockholm. So Wired monitors the European startup ecosystem in particular. And when we look at the cities that have the most exciting, fast growth companies, invariably, you get London, you get Berlin, Tel Aviv, but Stockholm is always up there. And Klarna is another success. We've had Spotify and a whole bunch of others. What is it about Stockholm that you think is leading people to aim high?
Well, I for one think actually that there's a couple of political reforms that were done historically that helped. First of all, if you look at myself, I'm from quite humble origins, so we couldn't afford a computer when I was a kid, but the government were subsidizing what they called PC at home reform, which actually helped families like mine being able to buy a computer. Second of all, one thing that was very clear is that the Swedish government pushed broadband extremely aggressively. And we could still see in the early days when we started Klarna that there was a huge difference in e-commerce penetration in markets where there was a dial-up still, municipalities which hadn't brought broadband to the same extent, and broadband. So I think that actually these two things have had a very significant impact on why we today have a lot of tech companies. And I do believe, I'm still trying to get my Swedish politicians to believe in this, but I do believe that free access to 4G, the first country or the first city that dares to take the fight with the carriers about that, would actually create an environment, because we all know that that's going to happen in the end anywhere. Everything is going to be connected freely. But the first country that actually does that is going to have an innovation, is going to be in the forefront, because they will start seeing innovation based on the fact that that's already a reality. So that's why I'm hoping to push for Stockholm, for us to continue to be among the tech cities in Europe.
So if David Cameron wants London to be the next Silicon Valley, he has to raise tax rates to about 70 or 80%. Thank you very much, Sebastian from Klarna.
Thank you very much.